And for those of you new to the program, each day we nominate a stock of the day, and today it is SEEK. So it's reaffirmed its guidance at a bit of an update that it's holding for investors today. It says that earnings will come in approximately at 560 million for the year, net profit of about 250 million. So remaining and really sticking with its previous guidance. However, it also mentioned that revenue for the full year may be slightly lower due to the continued moderation of job ads volume. So that is probably why we're seeing the stock getting hit today. It's one of the worst performers on market, at least at this stage. It's down by about 2%. So I'm going to start with my guest in studio, Ben Clark from TMS Capital. When you think about SEEK, solid business, plenty of tech behind it, but still at the mercy of economic cycles.
It is. They actually, I've had a look through that investor presentation this morning, and there's some really good charts. They are at the mercy of economic cycle in Australia. It's actually a new slide I haven't seen. I'm a bit of a SEEK tragic, as you know, Nadine. So, higher unemployment rate, if that's going along the x-axis, you certainly see a moderation of drop, and the RBA will like what SEEK's said today. But in the emerging countries, that's not the case, because the move from a job in a paper or through a recruitment agent or whatever, that they're still in their earlier stages of digitising that process, and the growth that they're getting is sort of overcoming the short term. So the structural growth's overcoming the cyclical. So look, it's like they warned. We're talking about against a $1.25 billion revenue guidance that might come in $15 million lower. So that's pretty small. And they said, there'll be a slight reduction in capex, which will mean that the EBIT line will still be hit. The interesting thing SEEK have been doing for the last 3 years is they've been amalgamating their platform right throughout Asia, Southeast Asia. So they had a SEEK platform, digital platform for Australia, and then they have one for Indonesia, and then they have one, et cetera, et cetera. And so they have spent a lot of money over the last couple of years effectively becoming a one platform business. And I think, that's forecast to end next year, the spend on that. And that's when you might start to see, I think, the really strong earnings growth coming back for the business as the capex spend drops away.
So it is today trading at 2360, roundabout there. Buy, hold, or sell today?
I think it's probably a hold at the moment, just because I think that the uncertainty around, the employment market looking forward, that it's not going to sort of dissolve anytime soon. But there's still these great structural tailwinds going through into their Asian businesses, which actually Ian Narev called out, was kind of like we'd back, like, they really suffered during COVID, Brazil and places like that. So I would definitely continue to hold it, and it's probably one you buy on a dip from this stage if you can.
Which we could get given the market volatility and the pullbacks that we do see in tech.
It's down 5% this morning.
Absolutely. All right, let's go to Scott Phillips from the Motley Fool. Scott, when you think of SEEK, are you thinking about the international upside there?
That's a very good question. Look, Ben has covered the details perfectly, so I'll get straight to your question, which is, yes, to some degree. I see the international growth business as an attractive part of the overall SEEK platform, but I wouldn't necessarily put a huge amount of value in it. It's not exactly a free upside, because you're paying a pretty penny for SEEK shares today. But if you're pinning your hopes on that only or predominantly, I do think that might be a risky way to approach the business overall, by which I mean the cash cow business here at home is very, very, very good. So it's not just an international growth story. The international growth story, if they make it work, is where the cream comes on top of this investment. This is the not exactly pure upside, but very large amounts of upside. To Ben's point, if they can consolidate the costs and then grow the revenues, this has been one of the big challenges for REA, for SEEK. Car sales tried that thing. Remember iCar Asia, the deal they had with that. Frontier Digital Ventures also trying to get this classifieds model, which has been absolutely just so beautifully done by those three big guys. Yet they haven't been able to really get massive traction overseas. That's partly because the overseas markets are where they are, but it's probably a reminder just to be a little bit mindful of that one. I remember back in the day, Coca-Cola Amatil was a great story on the Indonesian growth possibility, billion people in Indonesia, all that kind of stuff, and just really never quite got up to speed. So I like the SEEK growth opportunity. I like the international business. I'm glad they're doing it. It's the right thing to do. I would be cautious on how much value you impute on that. And to Ben's point, I think it's a hold as well for exactly that reason. It's not cheap enough to be obviously a slam dunk. I absolutely wouldn't sell it. It's one of the very highest quality businesses on the ASX. But that international potential has to start delivering at some point to make it a buy again, or as Ben says, a meaningful share price drop.
Wonderful. All right, guys, that is a stock of the day, SEEK, and that's a hold from both of our guests.